Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu and Katie Greifeld. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with Tim Stenovic and Mike Regan. Welcome to our audiences in full on this Fed day here. A day where the Fed did not give any real change in their policy position, but they certainly gave us a big shift here in their outlook.
Yeah, it's certainly a day when the market said the Fed has officially, or I think the market has officially declared that the war on inflation has come to an end. Rate hikes have come to an end. And the Fed, Mike, is going to start easing. I mean, look at the rally we're seeing, not just the decline in bond yields, but also what we're seeing in the equity market right now. I mean, this is a historic day.
Yeah, absolutely. And I keep thinking about what we just heard from our guest, Sarah Ponzek of UBS, saying, if everyone's excited about rate cuts, it makes you wonder what in the economy will actually cause that to happen with the Fed. So it is a great day. It's a celebratory day. We've got the NASDAQ 100. I love round numbers, Scarlett. NASDAQ 100 up more than 40% on the year today, as of today. And really, it's not so much a rotation. It's every index is up more than 1%. So people are just buying everything at once with both hands.
Yeah, the everything rally just got another kick up in gear. And of course, the Russell 2000 up 3.5% right now. I believe this might just be the beginning of the January effect.
Okay, how about the Dow Jones, though? I mean, we're talking about small caps. Let's also talk about the Dow Jones as well, hitting a record high, just like you said, everything rally. Amazing moves, particularly in the bond market.
Yeah, the Dow right now looks like it's going to close at a record high. Remember, that's on the back of what is already really about a 12% rally since the end of October. You're hearing the bells here in New York, and let's walk through the numbers as we wait for the numbers to settle. But it's going to be green across the screen with the Dow up more than 500 points, or about 1.4%. The S&P 500 cracking above that 4,700 level, its highest level going back to mid-January 2022. And if you just do the math, you're now less than 100 points away from reclaiming that record high. That means it only needs a move of less than 2% in order to get there, a 1.4% move here on the day. The NASDAQ composite up about 200 points or 1.4%. And the Russell 2000, that was your outperformer here on the day, a 3.5% gain on the Russell that now has it flirting with 2,000.
Yeah, look at that. Broad-based. We're seeing a lot of green on the screen. And I got to tell you, if you peel back the layers of the S&P 500, hard to find decliners in there. Scarlett, 458 stocks moving to the upside today. Only 44 stocks moved lower. On the Dow, it's 27 stocks moved higher and 3 declined.
Well, okay, that's Mike Regan's job to look for some decliners. But in the meantime, let's look at the sector performers here. You have 24 industry groups, 22 of them finishing higher. Utilities, real estate investment trusts, and banks leading the way, each up by more than 2.5%. And the only sectors to fall are telecom services and insurers.
All right. Actually, and before we move on, too, I just had to double check this here. The NASDAQ 100 also at a record high on the day.
Okay, look at that. Well, speaking of record highs, we got Apple closing at a record high this afternoon. That's my first gainer, finishing the day up by more than 1.6%, 197.96. It has been higher intraday back in July, but this is a record high for closing. It closed a previous all-time high was 196.58 back in July. Finished the day higher right now by 1.7%, up another $3 today. Stock up more than 50% so far this year. Also got to look at the best performing stock in the S&P 500 today, Vertex Pharmaceuticals. This company absolutely surging on the day today as a result of the company saying its non-addictive drug helped patients with chronic nerve pain from diabetes. Up more than 13.2% closing and rallying to a record high. This drug was generally well tolerated at all doses, and Vertex is planning to actually move the drug into the final phase of human testing. And finally, we're back to, prices might be coming down a little bit, or the rate of increases prices might be coming down a little bit, but we could see more expensive eggs out there. Let's check out Cal-Maine Foods. CalmUS is the ticker symbol. The nation's largest fresh shell egg producer and marketer, rose the most intraday. What's that?
I just spit it out because I'm fascinated by this
10.3%.
This broke yesterday after the close.
Yeah.
And the shares plummeted because everyone said, oh, avian flu, that's bad. But then everyone woke up and realized, well, if you're taking, 600,000 chickens out of production here, that means prices are going to go up. So a net positive. How does that work?
Well, that's supply and demand, my friend. It's the basics, right?
Can I ask one
What
question?
what's
What is
going
a
on,
fresh
Katie?
shell egg? What is the distinction there?
I'm guessing it's an egg that's not already been cracked.
Okay, very
Right?
good. Thank you.
That
Is that
should be
right?
what we're all
I'm guessing.
aiming to purchase, no?
I mean, you have to make
Well,
these
how much are the
distinctions.
cracked eggs? Because I don't think I can afford a fresh shell.
So I hope we don't see a return to these high egg prices. But Romain, you did talk about the news that we saw yesterday. The company coming out and saying that it has to close one of its Kansas facilities after it tested positive for the avian influenza. One analyst wrote that the virus has started to ramp back up across the U.S. Cal-Maine Foods up by 10.3% today.
Well, I did find a few decliners for you, Tim. Not many, or downers, as I like to call them. But
Womp womp.
big drop for Pfizer. Down about 6.7%. That's the most since June 2020. It was actually down as much as 10% at one point, which would have been the worst drop since 2009. But Pfizer lowered their full year revenue forecast to a range of $58.5 billion to $61.5 billion. So well below the $62.9 billion that analysts were expecting. It turns out that the sales of the COVID vaccine, not a bright outlook for those, as well as there was hope that their takeover of Seagen, the big cancer drug maker, would help their forecast, but not enough to counteract that drag from lower vaccine sales. So big drop for Pfizer. Also, Southwest Airlines down 3.8%. They actually did slightly raise the low end of their fourth quarter revenue forecast, but not the high end, and investors were hoping for more after JetBlue's forecast last week really raised sales and profit expectations for the quarter and the full year. So a bit of disappointment from Southwest here. And finally, Etsy down about 2.3%. They were down almost 9%. So this rally in the market is sort of cutting the losses in some of the stocks that were down. Etsy came out and said they would cut about 11% of its marketplace workforce. Now, sometimes job cuts can boost a stock, but not this time. Etsy down about 2.5% on that news.
All right, let's get to the bond market because that's really where a lot of the action is today. You look outside of the equity market and you take a look at 2-year treasury yields right now. Just a fantastic plunge on the 2-year, down about 30 basis points. That is the biggest move since March. Of course, when we had that little bit of a banking meltdown, a lot of that is more cuts getting priced in to 2024. That's really where all the drama is. But then you take a look out of the curve and you also see a lot of double digit, I don't know if you can call that if we're talking about basis points, but the point being pretty big moves as well. You take a look at the 2s-10s curve continuing to march towards positive territory, but still about negative 42 basis points inverted with that 2-year yield leading the plunge lower.
Yeah, and of course, the Fed really driving this market right now. Of course, there are still some idiosyncratic stories out there, particularly when it comes to earnings. And we are getting earnings crossing the wire right now. This on the software company Adobe. Shares moving lower here in after hours trading after the company said that in its most recent fiscal quarter, EPS came in well above estimates, but revenue came in line. $5.1 billion in revenue in the most recent quarter, $4.27 on EPS. But here's your guidance going forward. The full year 2024 guidance, EPS expected to be in a range of $17.60 to $18 a share. The street was looking for $18 a share on average, and revenue for the full year. Actually, I don't have the full year revenue forecast before the current quarter, the current fiscal quarter here. They're looking at revenue of 5.1 to 5.15 billion. That high end of that estimate is slightly below the average of street estimates.
Yeah, go to the press releases. We continue to see Adobe move lower, down by 7.6% in the aftermarket. Dan Duren, Executive Vice President and CFO, saying that the company's performance in the fiscal year 23 drove world-class margins and operating cash flows of $7.3 billion. He calls out the scale, the speed of execution, and profitability position that the company for years of sustained success. But investors in the after hours certainly not buying this.
Just wanted to point out that the full year revenue forecast came out 21.3 billion to 21.5. Analysts were looking for 21.74 billion, but notable that these forecasts don't include Figma, which of course is still pending that purchase as the EU and the UK oppose that acquisition.
All right. Well, reminder that we're still in earnings season, even though we're close to wrapping up the final quarter of the year, guys. That is going to do it for Beyond the Bell, our cross-platform coverage of the market close right here on Bloomberg TV, on radio, Bloomberg Originals, and YouTube. Meantime, catch us tomorrow, same time, same place. Happy Fed Day, everyone.